Time now for an in-depth look at the market news as we start the week. And for that, I'm joined on the line by Dr. Hwang Seiwoon, Research Fellow at the Korea Capital Market Institute. Dr. Hwang, thank you for coming on today.
Thank you for having me today, too.
Well, Bloomberg reports that the Trump administration is looking at ways to limit investment in Chinese companies, possibly by delisting them from the American stock exchanges. The Treasury Department says it's not looking at that option at this time. But what effect has this had on the stock markets?
U.S. stocks finished the week lower after reports that the White House is considering limits on U.S. investment into China, aggravating the protracted trade dispute between the globe's two largest economies. Trump administration officials are discussing ways to curb U.S. financial exposure in China, including a block of all American investment in China and Chinese listing in American stock markets. As a result, the Dow erased a gain of about 130 points after the report and closed down 70 points. The S&P 500 also reversed all of its morning gains to finish down 0.53%, while the Nasdaq lost 1.1%. Asian stock markets showed mixed price movement on Monday. Worries such an escalation in the trade friction would hurt Japan the most weighed on the Nikkei, which lost 0.56%. South Korea's Kospi gained 0.64% today, shrugging off news that the U.S. administration is considering delisting Chinese companies from U.S. stock exchanges. Trading in Chinese markets was quiet ahead of a long break, which runs until October 7th.
Yeah, well, Dr. Hwang, we've been talking, of course, about a U.S.-China war in trade and then currencies. If it becomes a financial war, what would that do to the global economy? Would that essentially derail these talks?
It is argued if Trump's new plan to restrict the investment is a negotiating tactic to pile pressure on China to make concessions in its trading relationship with the U.S. ahead of talks scheduled for mid-October in Washington, D.C. to resolve the two-year-old dispute. Investors also concerned if it is a symptom of possibly multi-year struggle between China as a rapidly rising new economic and military superpower and America in its determination to maintain control of international economic order it helped create after World War II. It is more reasonable to recognize Trump's new plan as a harbinger of a long-term struggle. The financial sector is very likely to be a final battlefield between the U.S. and China. The U.S. has comparative advantage over China in financial sector and thus will keep trying to move its negotiation area to financial sector. However, China would strengthen its defense by opening its financial markets slowly. This implies that the new plan is more likely to intensify the struggle, and it could take longer for the two to reach an agreement.
Indeed. Well, now domestically in Korea, we'll see earnings this week from Samsung Electronics. We've also got Parliament due to question the government about the economy and its related policies. What else should we be watching this week?
There's a slew of U.S. data, including ISM manufacturing on Tuesday, the ADP employment report on Wednesday, and the monthly government jobs report on Friday. The numbers in the reports will serve as an important indicator for the market direction in the fourth quarter. Domestic trade data will be released early in the week. Korea's September trade report will be released on Tuesday. It is certain that exports would decrease in September. Exports from September 1st to September 20th were $28.5 billion US dollar, down 21.8% from a year earlier. Semiconductor byproduct and China by country were leading the export decrease. Investors are paying attention to the Samsung Electronics tentative earnings report on the third quarter, which will be released on this coming Friday. The market expects Samsung Electronics 3Q operating profit to reach 7 trillion won. Its semiconductor division accounts for 3.37 trillion won, display division 0.7 trillion won, and IM division 2 trillion won. It will be relieving for investors to find that downtrend in the semiconductor business is expected to slow down.
All right, Dr. Hwang, thank you very much for your insights today. We appreciate it.
Thank you very much.